So I'll tell you, the industry has this sort of unique way of doing what we like to call, this is a handsome word that we use in the industry, called feasibility, right? And Brian Mingham's on with me now, and I wanted to talk through a little bit of that. But first, let me kind of tee this up before I sort of intro you, Brian, right? And that is, renovation loans are based on the after improved value, right? What will that house be worth when the work is completed, right? But at the time when you close, that work's not done yet, right? So how do we secure that after improved value actually coming to pass? That's today's discussion, right? The viability of that project is really important, not just to the borrower, but also to the lender, right? We're lending against the value that doesn't exist at the time we close. So we have to make every effort to do our due diligence to make sure that A, the project is priced properly, and what is on paper from a contractor, can in fact be done for that price. Not as easy as you think, right? So, many lenders do many different things to try and, you know, reduce the amount of risk they have of that project not being priced properly, but I guess before I introduce you, Brian, I mean, it's easy to pick what you want. I want a new kitchen, or I'm dying to get a backyard pool done. It's easy to do that, but what's difficult sometimes is to pick out the things that the house needs to get done. The not so sexy things, like the foundation needs to get fixed. There's a hole in the roof. Maybe you won't pick those things up, and that's why I wanted Brian to come on and talk to us. But listen, Brian, I talk about, if I bring up your name in the industry, everyone says, I know Brian, that dude is awesome. Welcome to the Renovation Rundown. Tell everybody who you are and what you do.
Thanks, Sean, and glad to be here. Yeah, Brian Mingham, CFSI Loan Management. Everybody in the industry knows me because I spent 20 plus years at Chase and Countrywide, and I've done retail, wholesale, correspondent lending over those years. And so I went out on my own back in 2008 when I forget what happened, something, I don't know, depression, recession. Right, I
Little blip in
started
the market,
the
most people won't
market,
remember. Right.
everybody lost their job. And so I started what they call a property preservation company. I manage default real estate across the country. And one way to get out of that dirty business was to do something in mortgage lending so I could hang out with my friends. And so this business, CFSI, was my hedge against, the defaults going away, and construction would come back and I'd get to play with all my friends again. So that was 12 years ago, and all my friends, we're getting the band back together. So CFSI is a national provider of construction risk management services. So what you described, we help lenders make sure they're making good construction decisions. Your underwriter looks at incomes, assets, FICOs. They underwrite the borrower. It's unfair, if you were to ask your underwriter to find out if this $200,000 rehab made sense when they're not a construction person, right? I've got a guy that says it's going to be that, so yes must be the answer. And that's not the right answer. So we provide those services for lenders nationally, and we also do all the inspections and the fund control and the back-end services prior to. So that's what we do at 30,000 feet. Thanks again for having me.
No, thanks for being on. I'll tell you, we connected somewhere around 2018, I would say, and the need, for me was rethinking how we get comfort on the project. And I'll say a couple of things that, I've learned working with you guys, is, you could have a 20 by 20 kitchen and want to redo it, and you could spend 30,000 on it, or you could spend 300,000 on it, right? So what's the right number, for the particular project that we might be looking at, right? So my approach to you was, let's sort of build something. I don't know if you guys were doing it before we started, but let's sort of build something that was more akin to a cost analysis. You take the contractor bid, you review it, and you look at each line item to say, hey, framing is 10,000 on this bid, Sean, but I think, based on the amount of framing that needs to get done and that market that it's in, you're probably going to need 15, right? So we recommend an additional 5 to protect yourself in the event that this home improvement professional is off the mark, which happens a lot, by the way. So did I sort of describe how that product works?
Yes, you nailed it. So project feasibility is a fancy word for a cost analysis, right? So we take Bob the builder's bid and we look at his plans, his specs, his budget, whatever information we have, and whatever information you've given to the appraiser, because you're coming up with that ARV, that after repaired value.
Right. And I don't want to say that we're policing, what the customer wants to spend. Because if you want to you want to pay a really good contractor with, a high, reputation for an amazing kitchen, let's say, and it's really expensive. We're not there to police that, right? I think we're really looking for like the underfunded ones where you close and then you're stuck with the inability to complete that project because you don't have enough money.
Yeah, well, it's two-phase, right? It's the underfund but overfund just as well, right? You don't want to put a $300,000 kitchen in a $100,000 market value house, right? You can't get the value out of it, so that means the consumer is going to have to come in with $200,000 more in cash and not get the financing that you would give them to the LTV, LTC that would make them happy. They can still do it. It's just cash out of pocket, right? So there's a fine line when you're in that financing piece. But you're right. We evaluate the budget line item by line item. You're
So,
doing
so,
right. You're
so,
doing an addition, right? Like you mentioned, framing, right? It's not just framing, right? You're doing an addition. There's concrete, right? There's concrete, there's framing, there's drywall, there's all other things. And we have to do an analysis on how big it is, what's the size, all of that comes into play with costing.
so that's what I was going to ask you to explain to the audience here is how are you guys developing confidence? How are you doing it? How do you know what within a degree, let's call it 10% higher or lower, that this particular budget is doable?
Yeah, perfect question. It's I can say that costing and project feasibility is much easier on a ground up construction. There is
Really?
there's very little wiggle room. We know exactly how much concrete, we know exactly what's missing because it's a piece of dirt. Every element of construction goes into that home and a budget will have every element. Renovation is a very different beast and can be very risky for the borrower and the lender. And I say that because your contractor says, I'm going to redo the kitchen. Great. 20 by 20, I'm going to demo it, $5,000. Okay, dumpster hauling. I'm going to reframe. I need drywall, right? There are estimating softwares out there. Again, there's probably a dozen of them now. They give you how much a piece of drywall costs, $37 a sheet. You need 27 sheets. Great. That's math. We know that there's sinks and we know the finishes and the type of cabinets you want, right? You just don't see a line item that says kitchen, $25,000. There's no description to it. There's no, what does that mean? Oh, I'm going to get a new kitchen. Yeah, but what are you expecting as a consumer for a new kitchen? So that's where cutting corners comes in. And if a project is underbid, right, the lender, Sean, closes a loan for John Doe. Wives, if you've ever rehabbed a kitchen, wives sometimes like different cabinets and fixtures and things after the loan's funded, right? that wasn't included in your original budget, and I didn't have the money for that. And right. So there's all kinds of those fluffy things that need to be decided early in the process. But we go line by line and tell you framing, right? Kitchen cabinets, right? If we have the Home Depot SKU number, we know what it is. If it says custom cabinets, we need to know what it is. All the estimating softwares know what an average labor rate is for a contractor in every market across the country. They know what inflation has done to all of construction materials. So we have all of that data from the estimating softwares. Plus, we do thousands of projects across the U.S., and we've got 12 years of data that help us narrow in specific markets, contractors, etc. So it's part art and part science, because it depends on, if you're doing builder grade, Kaufman and Broad entry level stuff, or you're doing some high-end custom home. Prices are very different, quality is very different, workmanship.
Yeah, and thank you. That's you brought up something in there that I thought was really interesting, and that is what I like to call scope of work clarity, right? And we see it a lot in my world. I get a contractor bid that comes in on a $100,000 project, and it'll say like kitchen, 35 grand, paint, 8 grand. Like, paint what? And what are you doing to a kitchen? Like, can I get a little description here? Tell me what you want, right? And I think, and you guys do a good job at pushing back on clarity when you need to, but think about the value we bring for a customer, that if they were using their own cash, working with a contractor who says kitchen 25 grand, right? Because they're using our process, we force them to give us that clarity, but it's that clarity that makes all the difference when the loan is closed, the honeymoon is over, and you're swinging the hammer. It's that clarity that makes all the difference in the world should things go a little sideways, right?
Well, you're exactly right. And my tongue-in-cheek comment about, the wife making changes. But if you get a contractor that says 25 grand and you didn't ask the right questions and didn't get the detail in the contract that you have with your contractor, you get halfway through, you've already spent the 25,000, the contractor leaves. You've got you've got a demoed kitchen. You've got some rough electrical and plumbing, and your wife is yelling at you nonstop because you guys don't have a kitchen. And then you got to figure out what to do because all the money's gone, right? That's a real thing that happens day in and day out when people don't, right? Force process is maybe not, the best thing, but credit risk from a consumer and a borrower and maybe a contractor they don't know that they're hiring, right? Bob the Builder in, Islin, New Jersey. I don't know him. I just picked him up. He answered my phone call. He gave me a bid. Seems fine, right? We add that clarity of sometimes people like to make a lot of money in specific line items, right? Framing should be $5,000 because you're only reframing a wall and the guy's got 10 grand in there, right? He's got extra money. And then you look at his sink line item, and his sink line item says $175, right? So we can tell you where line items are fat, where line items are thin. But as it gets to the risk and the lender risk and the borrower risk, it's important to think it's a renovation and you're renovating a house, probably because it's older. It's U.S. housing stock is average 38, 39, whatever the years are, the last government thing. So houses are older. People have leaks, people have mold, people have dry rot, people have termites. And visually, when that contractor, in his best professional estimation, didn't know what was behind the wall. And when you have to reframe the entire back of your house because of previous termite treatment or dry rot or a sinking foundation, and when they pull it up, they have to address that. You guys are very good about the term and use of contingency. There are lenders out there that don't require a contingency. It's important to guide borrowers through the use of contingency and why it's important, especially if they have a change order without a contingency. There's 100% cash out of your pocket to cover that instead of using a contingency. And it's very difficult to cut back on the finishes you use, right? As a lender, your biggest risk, you buy that house for $250,000 and you demo it day one. It is not worth $250,000 on day two because you demoed it. That is the risk from lenders in their ARV projections is during construction, that house is now worth $150,000 or $100,000. And you're shooting for the ARV to be $500,000 because you're putting $100,000 into it and the borrower's going to have a nice equity position and everything's great. But that's
it's like you jumped out of the airplane and it's very risky until the parachute opens, right? So it's
correct.
The distance
and so, as you mentioned, the lender is at risk at that point, right? Yep. And the ability to have a third-party independent person that doesn't work for the general contractor, making sure that that budget is correct, because if the budget is wrong, the borrower has a risk of possibly a default because I didn't know, I didn't have enough money.
I like what you said earlier too, and just to call that back really quick before we move on, and that's like the budget being front loaded. Like sometimes we see demo and dumpster $40,000. It's like, really? No, it's not. You just want that money up front now, so you're putting it in that line item, right?
And we see the term mobilization, right? So somebody's getting a chunk to mobilize. No, you just bought you bought a new pickup truck is what you needed. You needed a new, right? So to mobilize it, it's a $75,000 rehab, right? It should take you no more than 60 days to knock that out. What are you going to mobilize? Are you bringing people on Elon's Starship from Mars? I mean, what's going on?
Right. So I'll go to another topic here too, which you kind of touched a little bit, and that is, the ease, and, a lot of lenders will use, companies that take a bit of time to get out there, but you guys do a great job at having national coverage. So no matter where my transaction is, I can call on you to get in and out, go to the site, kick the tires at the site, make sure I'm not missing anything, not only on the cost of the things that they want to do, but what if they're missing things that would affect the health and safety, which would make your loan unclosable, if that's a term, right? And that's where you guys give us a little insight. You go out to the property, kick the tires on the site, make sure that the contractor bid that the customer has is good, but you'll also pick out some of the things that, hey, Sean, this foundation's not good. And nobody said anything about it because they're all focused on the kitchen. But you might want to have something in the budget to deal with that.
Yeah, no, we always look at a project as bare minimum, kind of FHA minimum standards, right? You have to be able to close a loan. You have to have the bare minimum for health and safety to be done. We point out, right? We'll take a picture of the furnace. We'll take a picture of all the different things. Consumers don't always understand lifespans of items. It's important to know if things were maintained properly. That's why everybody tries to go out and get a home inspection, right? That's why they're important for those guys to go through and give a detailed explanation of what else could be done in conjunction with your licensed, insured, great contractor that you've known for 20 years comes and gives you a legitimate bid to do the house, right? So all of that coupled with a project feasibility and that independent party, we always use the term trust but validate.
Yeah, I did a show on unexpected maintenance costs, and you guys might want to check that out. But in that I talked about an interesting statistic about first-time home buyers really not getting the things that they're not very familiar with because it's their first home. squared away on the purchase, that come back to haunt you within the first 2 years of home ownership. That can be really expensive, right? You buy a house today and you find out that, for one reason or another, your roof needs to be replaced. That's not a small expense, right? That's a pretty big expense that pops up out of nowhere that you have to do.
And there are so many, I don't want to pick on FHA, right? But, FHA tends to be, the lower percentage down payment. If you put 50% down, on a property, you must have some money from someplace. But if you're a first-time buyer, like I was, my first house was an
Yep.
FHA 1-year ARM, right? You put 5% down and you struggled to do that. So having that maintenance understanding, I'm going to have to go back and look at that podcast because it's absolutely critical. Roofs are $25,000, right? Plumbing, right? If you didn't check the sewer lines or the septic, or how old is the house, and is it cast iron or clay pipes, electrical, plumbing, right? All of those things become very large items. And again, those are the things you don't see. It's not sexy. We all watch Property Brothers. We all watch HGTV, and we all know that we can build a 10,000 square foot house for 150 grand, and it looks like it's unbelievable in Malibu. It doesn't happen, and it doesn't happen in 30 minutes. And that's why
No,
that's why it's critical to have a good contractor and a budget and a plan and a contingency plan. Because if you lose your drywaller because there was a delay in the framing, and he's on something else for 2 weeks, well, that means your painter's gone. Your electrician gets tied up on something. You miss your permit sign-off day. All of these things have downstream effects, and it's a choreograph, a ballet. No matter how unsexy you think construction is, it takes a lot to property manage, keep people happy. We play, psychologist. When a borrower and a contractor get into a dispute, sometimes contractors want to walk off the job. I'm not dealing with this. They're crazy. They don't want to pay me. That's your worst case scenario, right? You don't want to switch contractors midstream, because the next guy that comes in may not have the same pricing as the guy that gave you the first contract. All of that plays into risk for a lender, risk for a borrower, headache, drama. And we just want to avoid that as much as possible.
Right. And listen, I got to tell you, and you're 100%. I mean, we don't want to change contractors, but it happens, right? And when you got a good enough budget, we've had the analysis on it. We know that it can be done for that price. And the way that renovation loans work is, your contractor's paid in arrears for work done. There's always enough money for you to hire another contractor who can finish it for that price if you do it right. So, Brian, thank you. We've gone almost 25 minutes, man. I went by quick.
You talk a lot or I talk a lot. I'm not sure which one it is.
Well, I according to my family, I talk too much, but we'll see. But thank you for coming on. And I tell you, I really love working with you guys, but I really wanted to bring you on to talk about how it works, why we do this. There's a lot of times up front where customers ask us, what do I need that for? And then they're super happy that we got one. Just the same way with contingency. Customers are, what do I need that for? And then after they close, like, thank God we have that contingency, right? So I really appreciate what you guys do. You're really quick. You get it back to us. You're never in the way. Like, my transactions never held up because I need, feasibility, or what I like to call a cost analysis from you guys, right? So you're doing the industry a great service. I know you got some really big stuff on the horizon. I'll give you like maybe 2 minutes or so. If you could tell me what you think is coming soon, that's really gonna push the industry forward.
Yeah, no. And again, thank you for the compliments. We work hard every day to try to get our customers their reports back timely, not to, mess up loan closing. So the biggest thing, or the buzzword now, is all about AI, right? How is
I knew
AI
you were
going
going to bring up those two letters. How did I
to
know that?
how is AI going to change the world? AI doesn't swing a hammer, so it's not going to revolutionize, per se, construction. But what it does do is it helps us recognize when items are overdone more quickly, right? The computer and the algorithms can do a lot of that analysis very, very quickly. So that's going to speed up the process. We have AI, we've been using it and loading photos of what percentage of the work has been done. It's giving us answers. It is
Well, that's
quickly,
pretty cool.
it's quickly becoming, yes, it's framed, it's done, it's 37% complete, right? It's learning quickly. It's also looking at those project feasibility photos and looking at after photos. Maybe somebody removed a header and didn't talk about it and didn't shore up that header and causes possible construction risk later. It's identifying things that maybe you wouldn't notice in passing. So there is a lot of data going into it to speed up the process, and really help more risk analysis. But it doesn't swing a hammer.
Well, thank you. I'm looking forward to kind of seeing some of that come into fruition. We got some pretty cool AI stuff on our side of the fence that's happening with visualization and all that other good stuff. You know, my previous show with Skip Shanker and Ready for Remodel, they got some great things going on there for that. So I got to tell you, Brian, you guys are great. I love working with you. Thanks for jumping on. I appreciate it. All right.
Thank you very much. Great to see you. See you at the next show.
We'll catch you soon. Bye.
All right, pal.